7:37, time to focus on business news. Our business editor Mike Eppel joining us now. Mike, a major quarterly loss for an oil giant based right here in Calgary.
Yeah, Suncor, Ted, put out its earnings after the close of trade last night, and there was quite a bit of red ink in the latest earnings update from Suncor, which is, of course, the parent company of Petro-Canada, $2 billion total, and a lot of that had to do with one-time asset value write-downs on various properties around the world. And again, it just reflects the drop-off in oil prices, which in the fourth quarter were still at around $45 per barrel U.S., This morning, we're around 33. So again, you've still got this retreat for oil in the near term that may affect Suncor's current quarter that they're operating in. Having said that, the company said that their operating costs on the Syncrude project, for example, are around $27 to $30 per barrel Canadian. So there's actually still an opportunity here to make money, even with the price for oil as low as it is. But nevertheless, the latest quarter not all that great. But having said all that, I just looked at the screen to see the start of the day on the markets, and we've actually got Suncor up to open the trading day, and the TSX was up a little less than 100 points. A lot of volatility in the energy market specifically, and the price for oil this morning has been all over the map. One moment it's down sharply, then it's up, and there's speculation about what Russia might do with production, and OPEC talk yesterday again about some sort of behind-the-scenes meetings, Venezuela pushing for a cut, Saudi Arabia saying no. So with this as the backdrop, you've got a lot of volatility built into the market, and then you add to the mix the U.S. dollar, which, of course, oil is priced in. The U.S. dollar yesterday saw its biggest one-day drop in about 7 years against a benchmark of currencies, because everybody's pushing back the timeline now on U.S. interest rate moves because the U.S. economy seems to be struggling in the near term. So a lot of forces in action here again today, and volatility to the max, but the price for oil is up at last check. BCE, parent company of Bell Canada, announcing it's raising its dividend 5%. Earnings there coming in around $500 million for the latest quarter. That did, though, include $120 million in severance costs related to job cuts recently announced by Bell Media. And the reaction to the Rona buyout, Ted, yesterday we saw the stock price spike about 95%. Not a bad rate of return for a single day for investors who were applauding it. And it's going to be interesting to see how Lowe's integrates Rona going forward here, but it does not seem to have as much resistance, certainly from Quebec specifically, after the first time Lowe's tried to buy Rona back in 2012. Back to you.
All right, good stuff. Thank you, Mike. That's our business editor, Mike Eppel, this morning. You can hear Mike on 660 News at 26 and 56 after the hour.